Welcome to today's episode. We'll be learning taxation of employees. Please do well to subscribe to our channel and share to your friends. Taxation of employees. It is mandatory that employees should pay tax. Taxation happens to be one of the main sources of revenue to government. So as a matter of fact, employees both in public and private firms are expected to pay tax based on the income they earn. So we have two categories of income. We have earned income and unearned income. When we talk about earned income, it refers to income an employee derives from trade, business, profession, or vocation. Unearned income are income other than income derived from trade, profession, vocation, business, etc. Unearned income can also be regarded as an investment income. So when an employee is to be subject to tax, we have to compute the total income he has earned, both the earned income and the unearned income, the total income he receives for that particular period, then deducting some certain exemptions before charging the remaining figure to tax. Employee may also enjoy benefits in kind. Benefits in kind. These are some basic amenities that the employer pays for the exclusive use of the employee. So it is the employee that enjoys these services. So if an employee enjoys services like this, it is equivalent that he also receive the income for such services. So all these are also to be included when computing his chargeable income. Benefit in kind to include the use of assets. Now, when an employer acquires an asset, be it car, official car, plant and machinery, furniture and fitting, for the exclusive use of the employee, it is said that the employee is deemed to have enjoyed 5% of the cost of that asset, where the cost is known. If the employer gives the employee an official car, so we cannot calculate the total cost of the official car as part of the income that the employee has received. So what we calculate as the equivalent to the income that the employee has received is 5% of the cost of that asset, if the cost is known. And if the cost is not known, it is 5% of the market value of the asset. The market value is determined by the tax authorities. So the employee can also enjoy residential accommodation. Residential accommodation. So if the employer pays an amount for rent for an accommodation for the employee, it is equivalent that the employee has enjoyed an income to that amount paid for accommodation. So if the employee pays 200,000 per annum for rent of accommodation for that employee, this 200,000 should be added as part of income that the employee has received. So this accommodation is calculated on the rateable value. Rateable value. Another thing that the employee may also enjoy as benefit in kind is a domestic servant. Domestic servant, night guard, etc. So anyone paid to this person here to serve the employee, it is deemed that the employee has enjoyed an income equivalent to the amount that was paid for these services. So all these are categories of income that an employee should be taxed on. Then the unearned income, like we said, these are income other than income derived from trade, business, vocation, or profession. And it includes investment income such as unearned income, include income such as royalty, rental income, dividends, income from patents, trademark, etc. After calculating the total profit of the employee, you also consider some certain contribution that the employee made, which are exempted for tax purposes. So we call them tax exempt. You must deduct them first before calculating the chargeable income of the employee, so as to reduce the tax liability of the employee. So they include National Housing Fund, National Health Insurance Scheme, life assurance premium, we have pension and gratuity. Where an employee receives 3,000 naira and above, is supposed to contribute to National Housing Fund. For National Health Insurance Scheme, where an employer has over 10 employees, he can contribute to the scheme. For federal or public space, we have 3.25 for employer and 1.75 for employee. Then for private, 10% for the employer and 5% for employee, making 15%. Life assurance premium that is contributed will also be tax deductible. Tax will be exempted from tax, pension, and also gratuity. In another allowance given to the taxpayer again is called the consolidated relief allowance. Consolidated relief allowance. Now, for this new Finance Act, we no longer consider children allowance, dependent relative allowance, etc. So we consider the consolidated relief allowance to the employee. And it's calculated 200,000 or 1% of gross income, whichever is higher. So you calculate 1% of gross income, you compare with 200,000. Whichever one is higher, you choose that figure plus 20% of gross income. That becomes your consolidated relief allowance. Let's consider the format to compute chargeable income and also the tax liability of an employee. So we start from here. It's a computation of chargeable income for that particular year of assessment. We have earned income, that earned income. We have employment income. This may include salary of the employee. We have gratuity. We have income from trade or business. Then benefits in kind, accommodation, official car, domestic servants, etc. We bring them down. Unearned income include your royalty, bring the gross amount down. If they are deducted into the dividends, the gross amount, if they deducted withholding tax, you must calculate the gross value back. Rental income, etc. We got this income down. Then less non-taxable income. Less non-taxable income. And you get total income. Then you are supposed to also subtract all the tax exempts from this figure. So all the tax exempts, you deduct them, which include National Housing Fund, National Health Insurance Scheme, Life Assurance Premium, Pension, Gratuity. You deduct all of this to get the gross income. Gross income. Then you calculate the consolidated relief allowance. Consolidated relief allowance, which we have considered that is 200,000 or 1% of the gross income, whichever is higher, plus 20% of the gross income. You bring allowance down and you deduct to get the chargeable income. Chargeable. So this is the income that will be subject to tax. Now, how do we compute the tax? We use the tax table. So the tax table that will be used to compute the tax says for every chargeable income that the employee has earned, the first 300,000 should be assessed at 7%. The next 300,000 at 11%. The next 500,000 at 15%. Next 500,000 at 19%. Next 1.6 million at 21%. And if the figure is above 3.2 million, let's say you have 4 million as the chargeable income, and you have charged 300,000 from that 4 million, you've charged 300, you've charged 500. So if you sum all this together, it will amount to 3.2 million. Let's assume you have taken 3.2 million from the 4 million. The remainder, which is 800,000, will be subject to 24%. So we say when it's above 3.2 million, the balance, if the figure is above 3.2 million, because this is a total of 3.2 million from this place down to this point. If the figure is above 3.2 million, then the balance will be charged at 24%. So we now consider a practical question.
Okay. Malam Sule Yusuf is an employee of Temidiri Limited. His salary is 5 million per annum. He's married with 5 children. The first 2 are from his first wife and the remaining from the second wife. The 2 wives lives with him. The eldest child is now a university graduate and teaches in a secondary school in Kaduna, while the remaining children are university students. All these things are irrelevant. They are not even relevant to the question because we only calculate consolidated relief allowance now. Malam Yusuf has a life assurance policy with Jabu Insurance Limited. The sum assured is 250,000 naira and he pays a premium of 2,500 per month. So for the year to be 2,500 times 12. He also contributes 1,000 naira monthly to a pension scheme approved by the Joint Tax Board. The following information is made available. The company pays 180,000 naira per annum on his accommodation and provide him with an official car, which has a market value of 2 million naira. He spent 6,000 naira on his aged father and 7,000 on his aged mother. Both have no sources of income due to old age. He will be retiring on December 31st, 2021 and will be paid a gratuity of 300,000. He will also be paid a lump sum of 100,000 for loss of office required. Compute the tax liability for the relevant year of assessment. So without wasting time, you bring the name of the employee down, Malam Yusuf Sule. Computation of tax liability. Okay, say for the relevant tax year. So which year? If you go through the question, you will see the relevant tax year. So looking at the question, he will be retiring on December 31st, and so December 31st, 2021. And take note, the basis period or the basis of assessment for an employee or for personal income tax of an employee is under ASHWA. So it will be for 2021 year of assessment. But if you are computing income from his trade or business, it will be strictly on preceding year basis. All right. So you bring down the earned income, which are given the question. So we're giving salary as what? Salary is 5 million naira. So no other item again there. Let's look at the benefits in kind. Benefits in kind. Benefit in kind. Okay, so we are told that the company pays 180,000 naira per annum on its accommodation. On his accommodation, and provide him with an official car which has a market value of 2 million. So his accommodation is assumed that he has enjoyed an income equivalent to the rateable value of the accommodation, which is 180,000. Then the official car, the market value of this car is 2 million. And I've said before that you cannot compute the total value of the car as what the employee enjoy as income. Rather, we calculate what? 5% of 2 million. And that will give us 100,000. When you add together, give us 280,000. So that's the total benefit in kind Malam Sule Yusuf enjoyed. Then, looking at the question, we are told that he will be paid a gratuity. So take note, gratuity is being paid to him. The question said he will be paid a gratuity. That would be in number, okay, you can see that in C. He will be retiring and will be paid a gratuity of 300,000. So in this case, it's not just stated that he contributes. So this gratuity will also fall under tax exempt because he is receiving a gratuity. So that will be recorded as income first. We'll be paying gratuity of 300,000. Then let's look at the unearned income, if there is any in the question. I think there's no unearned income in this question. So you should know examples of unearned income like dividends, rental income, royalty, etc. So you total. This will amount to 5,580,000. So since there are no other unearned income, you less all the tax exempt. So this is gratuities figure. Less tax exempt. So we are told that it contributes 2,500 per annum for life assurance. For life assurance premium, it contributes 2,500 per annum. So 2,500 times 12 will give us 30,000. He also contributes to pension 1,000 naira monthly. You can see that in alphabet. Think alphabet. It has in the second or the third paragraph. The fourth paragraph. He also contributes 1,000 monthly to a pension scheme. So to the pension scheme, 1,000 monthly. So for the 12 months or for the year, he would have contributed 12,000. Then the gratuity 300,000. Total will give us 342,000. So when you subtract from the, you should have 5,238,000. This becomes our gross income. Gross income. So the next thing we are to deduct is the consolidated relief allowance. So deduct your consolidated relief allowance. Consolidated relief allowance is 200,000 or 1% of gross income, whichever is higher. Whichever is higher. Plus 20% of the gross income. So 1% of this figure will give us a 52,380. 1% of this will give us 52,380. So it's lesser than 200k. So we choose 200,000 plus 20% of this figure will give us a 20% of 5,238,000 is 1,047,600. Then you add 20% of this figure, 1,047,600. Then since 200k is higher than 1% of the gross income, you choose 200,000. When you add together, it will give us 1,247,600. So that becomes our consolidated relief allowance. 1,247,600. So you deduct to get the chargeable income. So when you subtract this consolidated relief allowance from the gross income, you have the chargeable income. And that would be 5,238. So that's 3,990,400. 990,400. So we will now compute the tax payable based on this figure to get the tax liability of the employee using the tax table. So from the tax table, the first 300,000, please, you should note, since this figure is beyond 3.2 million, the difference between 3.2 million and this figure will be the amount we will charge at 24%. So first 300,000 should be charged at how many percent? 7%. Next 300,000 at 11%. Next 500,000 at 15%. Next 500,000 at 19%. Next 1.6 million at 21%. So 7% of the 300,000 will give us 21,000. 11% of 300,000 is 33,000. 15% of this will give us 75,000. 19% of 500,000 will give us 95,000. 21% of 1.6 million will give us 336,000. Okay? So we have charged 3.2 million so far. 300 plus 300, 600 plus 5 plus 5, 1.6 plus 1.6, 3.2. And the figure that we are charging to tax is above 3.2. So you've charged 3.2 from that figure. So what's the difference between that figure and 3.2 million? So this figure minus 3.2 that you have charged so far, what is the difference? The difference is 790,400 at 24%. So that will give us 189,696. Then you sum everything together, this become your tax liability or the tax payable by the employee. $189, so add everything together, 75,000 plus 95,000 plus 336,000 plus 189,696. That's 749,696. 749,696. This becomes the tax payable of this employee, Malam Sule Yusuf.